In this presentation, we will work a problem recording transaction to a special assessment debt fund. The information is going to be on the left side. We're going to enter that into the blue area on the right side. We will be journalizing into the general journal here, then posting to a worksheet, that worksheet in order, assets in green, liabilities in orange. Then we have the light blue, which would be the equity section in a for-profit organization, net position here. The dark blue is what would be the income statement in a for-profit organization. Those are temporary accounts, those accounts that typically close out to what would be the equity section in a for-profit organization, closing to net position here. So on the information on the left side, here's going to be our scenario. We have a community that wants to construct a park. The city has issued the money for the construction of the park with a bond, and the community is going to have to repay the bond. So the city levies on property for the park $7 million. It's going to be payable in 10 installments. Interest on the unpaid amount is going to be 3%. Going to track this information in the Special Assessments Debt Fund. So we're going to track the receipt of this information in order to pay off the debt. We're going to break this out into a receivable first. So within our Special Assessment Debt Fund, we're going to have a current portion and a long-term portion of the debt that's going to be owed. So we have the assessment receivables current, assessment receivables long-term, and then the credit's going to be due to special assessment bondholders. Due to special assessment bondholders, the principal. So we're going to be collecting this money, and then of course we're going to be paying it out to pay the special assessment bondholders for issuing the bond, which was used to build the park. So the full amount then is going to be the $7 million. So I'm going to credit the $7 million. And we're going to break that out between current and long term. Now, there's going to be 10 payments. We're going to say that the first payment is current. So I'll take the amount divided by 10. That's going to be the current portion. That means the long-term portion is going to be equal to this plus this. Going to have to flip the sign, so it's really going to be equal to the negative of those two items. So there's our transaction. We got the 700,000, the 6.3. That adds up to the 7 million. If we record this out, then we've got the assessment receivable on the current. So here's the assessment receivable current in K4 equals the 700. Then we've got the assessment receivable non-current. So that's in K5 equals the 6,300,000. Then we have the due to special assessment. So due to the special assessment, this for the principal, that's going to be the credit of the 7 million. And that, of course, we have the debits minus the credits equaling out. Next item we're going to have, number 2, says we had a collection for the current year amount and interest on the unpaid amounts. So we're going to have the collection on these items. Now, obviously, we're jumping forward in time here because we're dealing with basically the collection of debt. So we're going to jump forward. We're going to say we're collecting the debt now. That means that the assessment receivable for the current portion is going to go down because we received it. So that's going to be a credit of the 700,000. And then we have the interest of the 3%. So 3% interest, we're going to say, is going to be revenue on that 700,000, or it would be like revenue. We're going to be recording it into an increase in the due to special assessment bondholders with relation to the interest portion. So we're going to be saying this is going to be increase in the liability because, again, we don't get to hold on to it. This is basically we're going to be taking the money is coming in, and then we're going to pay it back out. And so that's going to, the amount is going to be equal to the 7 million times the 3%. So, and we want to make that a negative. So I'm going to make this a negative. And that means that we're going to have cash going up, cash increasing by the negative sum of these two. So we're going to say cash is increasing. Let's post this out. Cash up top. We've got the increase to cash. We've got the assessment receivable current portion. That's going to be in K4. I'm going to go F2 plus F2 and pick up that 700,000. Then we have the due to special assessment on the interest. That's in K7 equals, and we'll pick up the 210,000. And that, of course, puts us back in balance. And then it says the portion of assessment equals to next year's installment classified as current. So now we're going to say now the amount that should be in the current portion then is going to be another 700,000 because we're going to say we're going to break out the current portion and the long-term portion. So we're going to then say that we have the receivable that's going to be the current portion, and we're going to have the receivable that's long-term. So we're going to increase the current portion, decrease the long-term by the 7 million divided by 10, because they're going to be those equal payments. That'll be the debit and the credit. So we're just basically reallocating between current and long-term. So we're going to say then that the assessment receivable current in cell K4, something's in it. So we're going to say F2 plus F2 and go pick up that 700,000. Then we have the non-current portion. So we'll scroll back up. We are in K5, F2 plus F2. Scrolling back down, and we get the 700,000 credit, and that puts us back in balance. Let's see what we have next. Number 3 says we have the principal payment made to the bondholders, and we also paid interest to the bondholders. So now we're going to make the payout to the bondholders. Cash is going to be decreasing. So we're going to take these due tos, and we're going to be making them go down for this item, and of course this item. And those two have in it the 7 million and the 210,000. We're going to be decreasing the first one by the 700,000 and the second by the 210. And so we're going to say negative sum. That's going to be the cash payment that we're then going to make. So we're going to say this equals and pick up the cash going out. And so we'll be reducing the liabilities, actually making the payment now. So we have the due to special assessment. We're going to go up top. There's something in it, of course. So we are in K6. I'm going to say F2 plus F2. Scroll back down and pick up that 700. And then we have the interest portion. So we'll scroll back up and we'll pick up the K7. Say F2 plus F2. And we'll pick up the 210, bringing it down to 0. And then we're going to go pick up the cash. So cash is going to be up top in K3, F2 plus F2, and we'll pick up that 910, bringing it down to 0. Now we're basically going to record the activity in the temporary funds, so we can see the activity within the temporary funds down here. So we're going to go to the next item, number 4, and we're going to say that we have a deduction, payment of the principal bondholders, and a deduction for the interest. And then the other side of it is going to be what is similar to like the revenue account, so that we can record the activity in the temporary accounts here. That's going to be the 700,000, the 210, and then the negative sum, the 910. So we'll record this basically into what would be similar to the income statement type of activity. And we're going to say that the deductions here are going to be in K10 equals. We'll pick up the 700, bring it up in the debit direction. Then we have the deductions in K11 equals. We'll pick up the 210. Then we have the additional principal and interest collections, kind of like the revenue side, the credit side, in K9 equals the 910. And that, of course, puts us back in balance.